My experience has been, and I'm not sure I know why, but my experience has been that silver's a late cycle mover. I think that precious metals bull markets are kicked off by fear buyers, and fear buyers buy gold because it's insurance. I think that once the precious metals narrative has been validated by increasing gold prices, that the greed buyers, the momentum buyers, move into the silver space. It's more volatile. It has a lower unit cost, so speculators in places like Brazil, Bangladesh, India can participate. But what I've noticed is that while silver moves later, it moves further and faster. And so, in my experience, while precious metals bull markets are led by gold, the most dramatic upsides for the speculators occur in the silver sector. The most speculative upside of all is in the silver equities, because the universe of reasonable speculations in the silver equities is so small, the market capitalization is so small, that when the generalist investor succumbs to the precious metals narrative and begins to move into the silver space isn't big enough to handle it. My friend Doug Casey describes the phenomenon as trying to siphon Hoover Dam through a garden hose. There just isn't enough market capitalization in the silver mining space to accommodate the money that comes into it. And ironically, as the price of silver and silver equities rise, despite the fact that they're less attractive on an absolute basis, that price rise validates the narrative. And as the price goes up, it becomes more attractive to people who haven't studied history or economics.
So essentially, you see silver as more of a speculation than an investment.
Yes, sir.
Cool, clear.
By the way, I love to speculate. I don't consider speculation to be a bad word. I joke that all the money that I now invest prudently and conservatively, I made by speculating wildly. I have been a holder of gold for my whole adult life. I've been a holder of gold because I believe that physical gold is an insurance product. And even during those periods of time when I thought that gold was at least fully priced, I held it because it allowed me to sleep nights and stay calm. There are greater challenges to my calm now than there have been at any period for the last 40 years. And so my holdings of physical gold has increased because it takes more of it to keep me calm. I have been both bullish and bearish as the circumstance dictated with regards to the gold stocks. The gold mining industry has been plagued by underperforming managements for a very long time, virtually my whole adult life. And there have been circumstances, as an example, the period 2008 to 2011, by the way, an epic bull market that I mostly sat out because the capital allocation that my industry was experiencing was distasteful to me. The gold mining industry now, if you look at it from the valuation metric of net present value of future cash flows at current gold prices relative to the enterprise values, are as inexpensive as they have ever been. And given that I think that the gold price and the silver price both rise, and that the shares of mining companies relative to current gold prices are as inexpensive as they have ever been, I'm attracted to the sector, attracted in three ways: as an insurance holder, which is to say owning physical bullion; as an investor in the 5 or 6 best gold mining companies in the world; and as a speculator in some of the rest. As to time frame, I would suggest to you that globally, investors are still more confident than I. And I think the perception of the risks that we fail are arithmetic. And I think that the perception of those risks are dampened by coming off of 40 years of fairly benign economic climate. So I suspect that the things that motivate me as an investor are very different than the things that motivate other investors. And it wouldn't surprise me if the broader investor response to physical gold, to the biggest gold miners, and to the speculative gold miners lags. which is to say, I don't know if somebody's going to be happy about gold mining stock investments in 2023 or 2024. I consider this phenomenon to be an inevitability, but it may or may not be imminent. I don't know. It's odd, I think, that now that I'm 70 years of age, with less time remaining on Earth, I've become much more patient. When I was in my early 20s, I wanted things to occur before the next long weekend. And I thought charmingly that my wishes had something to do with reality. What I've learned, now that I have less time on Earth, is that I am either patient or I become poor. And so I've become quite patient. I don't, where I have made serious amounts of money, it's required 4 or 5 or 6 years. Compounding works and markets work too. But I've learned, sadly, that there is a very large difference between inevitable and imminent. And once I mastered that, my investment performance increased markedly. I'm empathetic with that. I was that way as a young person myself. What I found is that my desires for certainty and speed were understandable, but they detracted from my investment performance. And over time, I decided that investment performance was more important than psychological satisfaction. I would suggest that people who are impatient want to know the unknowable. And I think that, ironically, that impatience is a waste of time. Much of the rest of what you talked about is simple and practical. I myself have a second passport. I hope I never have to utilize it. But I have the second passport for the same reason I own gold. I believe that if you have the ability to insure against a contingency, however improbable, where the penalty that you would pay for failure is very high, that if you can afford it, you buy that insurance. And to me, a second passport is that form of insurance, and gold is too. This is where it gets back to gold. And I use gold as a catch-all for precious metals, including silver. The market share of precious metals relative to other savings and investment classes in the United States currently is less than 0.5%.
All right, wow.
Down from a 40-year mean of 2%. And by the way, an estimated market share in 1981, its peak, in excess of 5%. I'm not suggesting that the world is going to sell all their long bonds and go into gold. I'm suggesting that the market share of precious metals will return to its 40-year mean, which is to say 2%. And if that occurs, demand for precious metals will quadruple. And that's what I think is going to happen. It's precisely what I think is going to happen. Prices are set on the margin. And I believe that that will be very, very good for precious metals prices. Will it occur in 2023? I don't know. Will it occur? I've never seen math lie. And I believe that even if I'm wrong, investors would be well advised to insure against the contingency that I'm right. It doesn't take very much gold in your portfolio to hedge against the sins that happen elsewhere in your portfolio. And to the extent that investors don't hold gold, and by gold, I mean physical gold or physical proxies in their portfolio, those people are in effect uninsured, which I believe, unless they are extremely rich and can self-insure, is very stupid. I don't think that in the first instance, people should buy gold just because they think it's going to go up. I think they should buy it as a way to maintain their purchasing power over the rest of their useful lives.
Yeah.
Buy it and in fact hope it goes down, because gold is insurance in its purest form, a medium of exchange and a store of value.
So Rick, would you say that just like the market fell in love with the Fed put over the past 15 years?
Yep.
Are you saying that investors should fall in love with the gold put going forward here?
Fall in love might be the wrong phrase. Do you love life insurance?
I mean,
Do you
yeah.
love home insurance? I think it's the responsibility of a mature adult to organize his or her life in a way that will give them the best outcome. And I think gold is an absolute component of that. I have no idea what's going to happen in terms of my mass psychology. I'm talking about your listeners taking action themselves to secure their well being.